All right, ladies and gentlemen, so this is support and resistance made easy. I wouldn't go too much to detailed trainings of support and resistance. We have full training on that if you want to, but to make trading very simple for yourself, you don't need to give yourself unnecessary stress or headache. You know, I said there are a few things that I always mention that a day trader, things that are paramount to you as a day trader is scalper and a beginner, all right? Or take trade simple, price action, order flow, or market trend. So, you know, when talk about order flow, where is the market coming from? Where is it going to? Demand and supply zone, support and resistance, validity, liquidity areas, displacement and imbalance. So I'm going to do that. I will demonstrate it very fast on the chart as we go forward. So pay attention. I'm going to give you through these basics now. So now let's go. Now, for instance, I'm not going to go to detail about five fingers. We have one for five fingers. Want to learn much about five fingers and all of that. They are paramount for you to learn. All right. So now, me, I'm a trader or a scalper, a day trader. And I said there are things that are very important for a day trader, you know, and a scalper. What's paramount for a day trader is 1 hour and 5 minute time frame because you're a scalper. Now, you want to understand, you know, order flow is very simple. Sometimes, so as a day trader, so what exactly am I supposed to do? And there are a few tools I'm going to give to you. Support and resistance strategy is very important, and just for you to know where is support, where is resistance, and all of that. And so we'll talk about demand and supply zone. Where exactly was market coming from as a major breakout or major, you know, pivot point that market was moving. So if you look at it now, you see that you have a demand zone downward here. But I'm not going to how to identify, but support and resistance is what I'm going to pitch to you, exactly using 5 minute time frame and all of that. Now, so there are a few things you want to do because to understand the trend properly. So now you want to do as a day trader. So first of all, you're going to go to your 1 hour time frame. Very simple, right? And as I come, maybe in a day, I want to trade and all of that. I'm a day trader. I just come. Now, I want to understand the order flow. The order flow, this market is bearish, right? Very, very simple. You understand? How do you know? This is a market structure. A higher high, you know, this is up to 1 to 3, okay? A higher high, yeah, we have this one as a higher low, a higher high, a higher low, a higher high, a higher low. Yeah, 1 to 3, a higher low. Now, this is a higher high. Now, so it's like the market is about to reverse if it does, right? So if this market actually reverse, so but you can, what do you want to do? Support and resistance is very simple, and you want to trade. Now, first of all, sometime as a day trader, there are a few things that are very important for you because you're using support and resistance strategy. There are very few things that are very important for you. Like we have said about the order flow. You have seen that this market is a downtrend, but exactly what you're looking for. Now, I'm going to mark out some key levels, which are the previous low. Now, sometime the immediate swing low, so which sometime could be even the previous day low. And this what happened. This is the previous day low here. And then an external high, so which is this, look at this one, is yesterday low, right? If I come today, yesterday low, right? But and that's the obvious swing high and obvious swing low. Are you seeing it now? This obvious swing high and obvious swing low. Now I haven't gotten that. So there are other few pivot points I want to mark sometime, maybe here, because when the market got to and actually move aggressively to a point, that could be like a demand zone and all of that. So this is a pivot point. So just take note. So I mark this out, right? Remember, you are going to 5 minutes to trade. So I mark this out. Any other point. Now, you as you are just coming in, this is already, now this is not an obvious swing until you have like 3 consecutive candle or 3 candle close towards the direction that you want to find. But however, it's an obvious point. So I mark obvious point. Remember, you are a support and resistance trader. Very fantastic. So I'm okay like this. Now, what I go to, I'm now going to go into 5 minutes. Very simple. I'm going to go to 5 minutes where I'm going to be looking at my triggers and important levels that I want to be acting from. So look at it now. So as I go to 5 minutes, so I will know what to do, what to act when the market gets all of those points, right? So when you go to 5 minutes, obvious the market, all right, you know, we say it's a downtrend. Now, when it was pulling back like this, many people wouldn't understand, right? So as it were, because, you know, it's because you are coming in now. If you are not coming in now, this is the point you probably will have been marking. If, because one of the beautiful things about trading is that when you are able to target to mark what we call pre-market mapping, which means you are supposed to mark this point. Because if it's pre-market, before the market open, is when you are doing this. And that's the one of the lovely things. But the question you ask me, Felix, am I not going to trade even when I miss the market open? Now listen, market open and pre-market opening mapping give you a chance to find what we call reversal point to an extent, a reversal point. And now once you miss out of reversal point, you want to be targeting what again? You want to be targeting retest. All right. You want to target a retest. So now let's go to 5 minutes. Now, so we'll get to 5 minutes. Now, so what will have happened in your 5 minutes? Remember, this was an obvious point, and this was an obvious point externally, and all of that. So all of those places you mark their liquidity level, right? Now, this is the point now. So the market on 5 minutes, another thing pay attention to, because you are using support and resistance. I do, so that you don't just stay one-sided and miss a lot of things. Market is very dynamic. Remember, you're a day trader. So now I've marked all of those points. Very, very important, right? Now, so what am I expecting? Now, obviously, market actually open and just continue all through. Now, going out for this liquidity. Very, very simple. Now, as market continue, this is what to do part-time, especially when you're a day trader and before we go to scalper. Now, the market move up to this point. Look at this point here. What to first do, beautifully, what to do is to take your rectangle and mark from the week. All right? That is the high of the week to the body of the candle. Okay, so pay attention, everybody. What I'm teaching you is a very powerful strategy. Now, what we have done here is that the market got here. Is it going to be just a pullback or eventually going to roll down? That's exactly what you're doing here. But of course, you are looking at these are external liquidity. You expect that the market should go and hunt for them. But there are cases where it failed to rally up there. And that was why you mark this. When you mark this, you're waiting for the market to actually create a displacement and a return to now get rejected here. So if you get rejected there, you are selling. Okay. If you break out to this point and now return back to the below this zone, you are selling. If you return back exactly to that point, you are selling. So that's what one of the fantastic thing about your support and resistance strategy. So now, when you are selling, you are looking at immediate probably swing low that created that high for your take profit. But in this case, what happened? The market rallied and broke, and this is a breakout. And then it broke out because you are looking at this left side, which is on liquidity. Fantastically, market again actually got to this point, but obviously didn't waste time and broke it. So now this is the point. You can see trading is not gambling. You are going to be meticulous. Now let's mark out this point. Very, very okay. Now, having marked out this point, this market pull back. So you're expecting it to return. Now listen, look at what happened. You know you're a day trader. As the market returned to this point, and it has already failed, I can tell you 99% that me and you have loaded our trigger here. So that means you have actually looked at your short and probably find your entry. Now, in finding your entry, now there is another point that was so hidden here. Look at it here. So now, this is the point. In taking your take profit, your selling, now I always say that at least as a day trader, you want to give allowance to your trade, you can agree to have, from a day trader, you can have agreed to have 10, 15 to 25, 30 maximum stop loss. So, but in this case, we're going to use 15 stop loss. I will tell you why. Now, your risk reward ratio, 1:2. That means you are targeting 1:2. Let's look at it. 1:2. Here. So this is your 1:2. All right. This is your 1:2. So your 1:2, and obviously, even your 1:2, where I will now be targeting, even apart from my 1:2, will be this low here. Because obviously I can mark it out to see why this low here, because it's a liquidity point. Very fantastic, right? This is support and resistance strategy. I'm not just even adding anything for you, but you are going to add some confluences if you want to do. Now, 1:2. You know why you are doing this? Because obviously your order flow shows that the market is bearish. All right? Your order flows that the market is bearish. Okay? And that's what you do, what you have just done now. Now, you have set the market. This is another point and advice I'll give to us. Once you have entered your trade, you know you are a day trader. Once you have entered your trade, you are expecting your market to deliver to your expectation. And there are two expectations you have. First expectation is that it should give you your profit, which means if you look at this, how many pips? We're looking at 30 pips, 30.8 pips as a day trader. So 30.8 pips as a day trader. So let's say you're using 0.0, let's say you're using 0.05, okay? So 0.05, that's 50 cents, right? So 0.05, depending on your account, please. So if it's 0.05, 50 cents, so that's going to be 50 cents, that's 0.5, 0.5 multiplied by 30, okay? That is, you're looking at how much? $15 in this your trade. Now, if you're using 0.1, that's $1. You're expecting $30 in this trade. Now, if you use stop loss, you're expecting $15 loss. These are the two things you're looking for. You're expecting $30 profit. You're expecting $15 loss. And once that is done, rest your case. You only come to observe again so that if you are going to change and the market actually change direction and you want to now change following the trend, it's a different thing altogether, right? So now you have done that. Look at it, will have intimidated you, right? And this is what I say, this is where risk management comes to play. Why the risk management comes to play at this point? Because how much are you trading with? Okay, you are trading with $1,000. All right, you're trading with $500, or you are trading with $10,000. Now, if it's a pro firm account, you are trading with $10,000. You already have said, okay, $10,000 is my pro firm account, but what is the maximum drawdown they expect there? 10% overall. That's $1,000. Now, what's the daily drawdown? 5%, which is $500. Now, you're going to go down and I'll now take sample size. The sample size of your $500 is $50, which is 10% of your $500. $50. That's what you are permitted to hit badly every of your trade. So with that, you have sample $50. That means with this trade, if I use and I'm targeting 15 pips as my stop loss, that's about 7 point something dollars, if I'm not mistaken. But if I use 0.1, that's $1 per pips. So that means I'm saying I'm going to lose $15. 15 multiplied by 3 is 45. That means maximum trade you can open per time at this point, it's 3 trade with 0.1. You can't open more than that because tolerance of how much you can afford to lose with this trade now is $50 and in anticipation to make $150. So if you go your way, you make $150. If you go against your way, you lose $45, $45 to $50. And that's exactly what you're doing. Now, haven't entered. Now, sometime when you enter the first one, you want to DCA. First one, you enter, and second one, because you ordinarily want to enter those 0.3, but you cut it into 3 to be 0.1, 0.1. And that's the logic, the very logical stuff you're doing at that point. So with that, you've said, oh, no matter what's happening, I'm going to enter 3 positions with 0.1. And so with 0.1 and times 3, that's about 3 positions. Now, with this, the 3 positions you enter, what's your plan? You want the first one to actually hit 1:2, right? Then the second one, you can see where an obvious liquidity is lying. Then you now say, okay, the next one is going to be there, right? So that will stretch you further to this point. That's going to be 1.2.3 ratio. Now, the other one, you actually let it open. Probably you're targeting a demand zone. Is there a chance that the market will return back to the demand zone? Why not? So that's why you set that one. Not that you set it immediately, all right? So if you look at it, let's do it this way. So now, not that you just set it immediately, but you expect and in anticipation that it may hit down to the demand zone. If we stretch it further to the demand zone, that's going to be 1:4, thereabout, which is going to give you about 71 pips. All right. So, but can it get there? There are no chances that it will get there anyway, because we have a lot of point here where the market could bounce back from. Okay. So, but you now, the TP1 has been taken, TP2 have been taken, the last position as the market pull back. Now, for instance, when the market return to this point and then it has pulled back, continue the journey, you are putting your stop loss below this, right? There's a tool we use to know where to put our stop loss called ATR. So, but we're not going to that now. You can do that. Study more about how to use ATR to set appropriate stop loss. So you just trail your stop loss down here. Now, after one, this is a break of structure. This has been broken, and expect that every time a break of structure happens, you expect a pullback. All right. Once a new low is created, that is, this is a break of structure, you expect a pullback. This is a break of structure, you expect a pullback. And now, sometime after a break of structure, people expect that pullback. People feel that it's a return. That's not a reversal, just a pullback now to continue the trend. So with that, now when this break of structure happens and after the pullback, you put your stop loss here again, and then the market continues. Now another break of structure has happened. All right. So what you want is that this one market now going to pull back, probably back to this point. So if you pull back and then and now continuing to break another structure, you are putting your stop loss till you get to your point. Now, all these are purely price action, just following support and resistance strategy. Very simple, right? So you don't disturb yourself unnecessarily. Now, additional tools you probably could add just to help you. You're confused. Now you now see you want to add a trend indicator, which is called EMA. Sometimes I say, because if you want to use more than one EMA, but I'll recommend just use one. But for confirmation, you want to use two, because your trading view may not allow you to use more than two tools. All right. Your trading view will not allow you to use more than two tools, so you can use 10 in one. So you use 10 in one, 10 in one, what's it called? 10 in one moving average. Okay. So this is 10 in one moving average. Now, what you're going to do is to go to the setting of the 10 in one moving average, and then you probably could set, but what I recommend is to just use 50 EMA. So I'm going to change it to 50 EMA. Now, when you desire to use more than that, I will tell you how to go about that, right? So 50 EMA, right? So 50 EMA is added to your chart. And the second indicator I probably will tell you to add is called MACD or RSI. So it can be MACD or RSI. Anyone you probably want to use, you can use MACD or RSI. Excuse me. Now, I've used 50 EMA. Then MACD, you go to your indicator and type MACD. This is for momentum, right? Moving average, convergence, and divergence. That's all. So if you add these two guys or RSI, you are good to go. So in case you are just confused, because you probably can be confused sometime, then let us enable the MACD. Okay, my MACD is actually different, but let me return it back to normal MACD, all right? So let me return it back to normal MACD that very many persons are used to. So my own is customized into the type of MACD, right? So now this is the conventional MACD we all know, right? So let's go. So what exactly are you doing with this to get to see momentum? Now, there are very many things we use those momentum indicators for. Number one, it's not only just to look for trade to enter long and short. No, it's to find what we call a divergence. What do I call it? Is to locate, to find what? A divergence. Number one, divergence. Number two, to find momentum when the market is preparing and all of that. And divergence too, to give you an idea of momentum. All right, that's what they are called momentum indicators. They are not just purely used for, that's where I will enter. And in fact, MACD, one of the things is that it gives me an idea of a squeeze when market is actually no trend. All right. When there is no trend, I can get MACD can give me that there's no trend, because sometimes you just be struggling with the market, but there is nothing trending at all. And another thing again, it even call it give you an idea of even when the bear market is still on and active. Look at the MACD. So look at it. If you are confused sometime, open it up, just double click, double tap on it, and it pop up. Now, there are three features of MACD that make it very unique. But be careful. When the market is not trending, MACD can give you wrong signal. That's why you don't trade only with indicator. So now, MACD has three components. Number one, it has what we call signal line, which is that orange line. And then we have the MACD line, which is that blue line. And we have the histogram, which is those volume momentum in here line. Now, what happened? MACD, when you have a MACD cross above the signal line, is a potential reversal or a potential bullish momentum, right? So if it's a potential bullish momentum, what exactly am I supposed to do? And I'm looking at the histogram. Is it printing green to show that the volume is available to support this shift in momentum? Now, if that's the case, yes, I've gotten that. That makes a lot of sense. Then you are going to look at your price action. Do we have any support price action? If you look at this now, it was obvious very bad that you didn't have reasonable volume to have confirmed your entry at this point, right? But for some persons who will have just jumped in, right? Fine, it's good, but that's not what you are looking for alone. Now, you're definitely looking at other things around it. That's what your 50 moving average is going to help you to do. Or perhaps even the MACD itself, even though this cross has happened here, but the volume is still very stunted. This is the stunted volume. It's not big. Unlike this, this is a very massive one, right? So now you probably want to now wait, okay, and say, okay, if that's what you're going to be doing for me, I want to wait a while to see how the market. Number one, your while waiting is about this MACD to cross the zero line. So there's a zero line of MACD to prove that, okay, we're actually bullish. And that's what it has confirmed, because the both of them, the signal line, and now in consonant with your moving average, is now above 50. Now look at it. You want to take trade, though sniper entry traders who are scalpers or day trader, they will have found an entry here. Let me tell you why. Because they've seen some signal like your candlestick pattern and all the like. But it can be very boring that you will disturb yourself eventually, right? But at the end of the day, when the market has crossed above here, above 50 moving average. So above 50 moving average make a lot of sense for you because you are a day trader. So now you want a bullish candle that will close above 50 moving average. And you have this. This one has closed that. This one has closed that. That means you are finding an entry. Remember, you are a day trader. You are finding an entry after this close. Now, looking for entry here. Remember, it's all the time that the market is going to give you what you actually desire. Now, where should be my stop loss? Remember, as a day trader, you have calculated what you can afford, all right, to part with the market. So ordinarily, where should be your stop loss is below the swing low that created this. That means you are going to have a very big stop loss, which means here, that's about 26. Now, what do we say? It's still within the range of your what you can part way with. So if you're using 0.05, that's 26, that's about $13 times 3. Now, so 1:2. Okay, so here is 1:2. So that you don't get stopped out. Conservative traders don't like get stopped out eventually, and the trade go away where they wanted. Now, here you have. So the market actually came down as if it's going to hit your stop loss. Don't bother. Let it stop your stop loss, and you wait for another perfect entry. So here you go. For me, when I find this entry, you know, I have marked out this high and this low, and the market decides to room this. So now this move this way and the market actually deliver eventually for you. Now, haven't delivered, that was a fantastic one, right? Good. Now, that's one reason why you stay in an instrument so that you don't miss out important move of the market. All right? So here we go. The markets again move and continue to do this. Remember, I told you about you are a support and resistance trader. Apart from even your indicator, your MACD, and all of that. Remember, we have marked all this point. That means even before your 50 moving average, you know, others are waiting for the market to cross below 50 moving average and they will enter. You have entered because you're using support and resistance strategy. But the first thing is that ordinarily by market structure, when this got to this point and created a low here, your entry, because going by market structure now, your entries definitely will align. Can you see now? A safe entry actually align with when it crossed below 50 moving average. Do you see that? And there's a price action here. Look at it. Look at Gravestone Doji from up. But for me, as a sniper entry trader, right? When this has been created and they return back to this point, I'm going to find an entry. Yes. I can get stopped out, no problem. Then the market was rallying up. Don't entertain fear. All right. Now, because here, this guy had actually returned and broke this structure. This massive move was highly intimidating, as if we're bullish, right? And then you have already entered. Don't bother yourself. Because now, if you had not, when the market again broke this point, there are chances that you enter here. Now, your stop loss will have been bogus. Are you seeing it now? Then, another low was created. It should not come to this point, but it still came and grabbed all the liquidity, and then you have a massive sell down. Now, others will wait again. For a very conservative trader, will wait like this. All right? So other conservative trader will wait because this is another low and the market rallied up. Then they want a break and retest. So this is a break and a retest before they find an entry. And they're finding an entry. Now some sniper entry traders, they don't care about it. They use big lot size. And so even to this point, they will have taken profit. And let's look at it because they can use one standard lot. So having entered from here, let's see here, to this point, come on, this is about 21 pips. Wow, this is big. This because I like plenty pips. I think I will have to work on myself on. I always like 100 pips, 150 pips, 200 pips. But don't follow my own anyway. So, but you know, so imagine for somebody who is using one standard lot, that's $10 multiplied by 21 pips. That's $210 already. And that's one of the things you see them in a short distance, they have taken a very massive profit. Even here, they have taken a massive profit. So another thing I will show you about in 5-minute time frame, especially you are trading support and resistance, is that when the 5-minute candle start printing, let me show you just candle pattern alone on your 5-minute. Yes, you understand your support and resistance. In a key level or in an area, an important area, when your market of 5 minutes, the candle, right, this is a displacement, for instance. You know certainly that this market was going to pull back before selling down, right? This is a displacement. You know that this guy was going to pull back before selling down. This is a displacement. You know that this guy, right? So haven't done this. So now this is what happened. In a good returning point of the market, you're on 5 minutes. When you're on 5 minutes, when you get to a key level, and the next thing it printed something like this. So sniper entry trader or scalpers don't even wait for all of those things we are waiting for. They'll just wait. Just look at the candle pattern. But they can be stopped out severally. So what happened? They have gotten to this point, right? And then the continuation of this candle, green, that's bullish candle, then come by another candle, depending on which area it's coming from. So if that's a stop, first candle with a wick up, and then next engulf the previous one, then they are selling. Now look at these guys, look at these people. Now in these 5 minutes, look at what the person is going to do. Let me just show you. He now returned back. Look at this candle has finished bullish, engulfing, sorry, and then he's looking for this entry. Now, if you look for this entry, let me show you something on 1 minute. So he goes to 1 minute and he's going to take profit faster than you ever imagined. Let's just go here. So above where the wick of the candle. Okay, so now, if you look at this one, this is 13 pips. Those people look for 10 pips, all right? They look for 5 pips, 10 pips, and with standard lot size. So if you go to 1 minute, so don't complicate issues for yourself because you have to. So if you go to 1 minute, you know it's a scalper. So remember I was telling us I can teach you about scalping too. Now from his 5 minutes, he have gotten the candle that engulf, all right? And he had found an entry. And of course, his stop loss is above the 5 minutes. So, because that's why it go to 1 minute. These guys get stopped out very frequently. So understand that, right? So, but he used standard lot size. So that's about 10 times 10, 10 times 6, that's $60, or times 7, that is $70. And he wants to make, this is 13 point something to make $130 thereabout. All right. And he's going to make it, right? So that's one of the things those people actually do. And so, but in your own case, just work on your 5 minutes. I have different strategy for 1 minute scalping strategy. There's a lot of things, strategy you can work on for 1 minute scalping strategy. But this top support and resistance strategy work like magic, but you have to be disciplined because that's one of the things. Most of us would trade without being disciplined. We just trade randomly. All right. We just jump into the market, no pre-market analysis, no setup, and all of that. So that's one of the things. You can see this guy is selling massively, right? So, and if you look at it, this signal was sent this morning. If you go to my group, you're going to see this signal for people who enters into it must have been in fantastic profit right now. All right. So that's one of the things I want everyone to really understand. Now, so what am I going to do? Now this one is getting delivered. Okay. Now that this one is getting delivered, what exactly shall I do? It's very simple. And once this is delivered and I've made my profit, it all depends on what opportunity will it still present to me from the demand zone. Will it break the demand zone? So at that point, if it breaks the demand zone, I want to now look at break the demand zone and retest it. If you break that and retest it, that means, man, I'm going to be finding another entry for short. But if you break and return, create another entry pattern for me, then I'll be taking profit. I'll be entering long. You can see your MACD continuing to do what it's doing. So this is very simple. For a beginner, you want to be profitable. And I always advise people, don't go around too many instruments at a time. It's very, very multitasking, and it will not allow you to win trade effectively. All right? It's very, very important. So you have to work on yourself to maximize, your profit. And that's exactly what I always want people to do when it has to do with trading. Now, so that's exactly what I use for gold. So you can see gold, for instance. Look at gold, right? Can you see gold? Let's come in here and let's look at gold. This is gold, right? So, and I said, first of all, you go to daily time frame, right? No, sorry. Now so there's another pattern that we go to daily time frame to check other things and all of that. You don't need any Jupiter to tell you that we're in a downtrend. So even your 50 moving average have shown you. So your market, you come in and you see that the market is below 50 moving average. Every opportunity you're looking for is to sell the market. Now, so let's do our normal stuff. Now, I have some point I'm going to mark here. This is the obvious low, right? Now, because if this is pre-market analysis, right? So let's take it to the pre-market analysis. Right? So then you have obvious high of the day. So it's very important for you. Just mark all the key levels. This is good. Go travel anyhow. So don't just enclose yourself within a short region. Now you have this obvious high, then there's another high here, right? So you're going to mark it. So all this area you're actually marking, their liquidity area, okay? Now we have another pivot point here, which was here. If you look at it, it was this pivot point that this guy grabbed the liquidity and returned back. And so let's leave that. So obviously, you're expecting this guy to crash down because so you are just coming in afresh now, you're going to mark this. But as at the time you come in for pre-market activities, you are not going to mark this because you're coming newly. And for that, you probably will have long or buy gold for the day. So now let's go to 5 minutes. All right. Now, your 5 minutes, lovely enough for you. You have the market behave the way it behaves. And then, so your 5 minutes, you probably will have been doing our style, right? So, but you have an understanding that this is a bear market, right? So, however, now, another thing you probably now continue to now do your 5 minutes, but you already have a bigger picture, right? What's that? 5 minutes, every time the market continue, this is a fantastic trend, right? Every time the market continuing to fantastically trend this way, right? That so remember what I say, right? Now this is what 50 moving average does for you. Market return back to it and have a confirmation of another move up, you buy. And what confirmed me, remember I told you, market was coming down here and then look at a pin and then the what do you call uptrend market or bullish candle, and this is an engulfing candle. You are entering, put your stop loss below here. You don't need to entertain unnecessary fear, okay? Then, and why you may have problem is that most time people just want to trade anyhow, jump from this. No, if you are pick gold for this session, pick gold, and then if you are picking another instrument for that session, pick that instrument, right? So now this guy continue. Now you have marked this point and said maybe that's where the market, but it broke it, and then another thing continue, and then you are at any as far as you are above 50 moving average, don't short, right? Just buy. So you can imagine how your mindset can be very small, and market just go away from your hand. So your 1 hour told you that the market is bearish, but for a time being, you will have taken fantastic profits. Now let's go here. This is a displacement. So what do you expect gold to do now that we have gotten to this point? Let's look at it this way. So what do you want gold to do? You're seeing gold now. Gold has moved up, right? So this is a high at the point, right? So let's look at it. You mark support and resistance so much and key levels, right? So here is it. You can watch the video again and again. So that I expect gold to actually return back to this point. That's what you're saying, right? So why? Because this was a high and this is a low, all right? This is the obvious low. So I'm going to mark it too. This is an obvious low. Now, so the market creates a high. So this is another obvious high. So that means this is not the high that created this. So we have another high here. So you have two highs or in between where you want the gold to return to. Okay. So here you have a low. This is the low that created this high. Fantastic. So this is a high, this is a low, and this is a high. So now the market returned and we broke at least the body of the candle, broke below this and returned to this high, and that was your selling point. So for anyone who probably, this is good, he can fast deliver your point. That means for people who have short gold from here, they can be targeting this low here. And now they are waiting for another buy, another sell, sorry. So looking for another sell because that's a displacement, right? So it's either we reject here, or we reject here, whichever way, all right? And if I want to do it just that, this is 5 minutes. You can't work on fib on 5 minutes. But let's even pretend we're going to work on fib on 5 minutes, but that's not actually supposed to be. So let's take it out from this obvious high now to this low here. So that means you have actually this point, right, for market to react, for you to be shorting. Now, at this point, what do? I'm going to be doing DCA. Okay, I will sell some from here, I will sell some from here, and I will sell some from here. Obviously, if it crosses above here, that's where I'm going to exit the market. So that means, looking at my market, I will be shorting from all this point. My stop loss, conservative trader will take it above this high, but massive aggressive trader, you just take it above the 78 February retracement level, and then they'll be targeting this low as their take profit. This is almost 2.7 already, and so that means here, these 3 points are actually my entry point. And then you can now see it's in consonant with what? It's in consonant with your market structure, as it were. So here, 1 point, that's 38 fib level. Here, that is 50 fib level, 61 fib level. So you want a rejection. So this is reacting, but this candle has to close. I always tell people, right? So this has to close, and you want to see the next candle, but you're already having a filler here. You're having a filler here. You're having a filler here. So maybe what to do, you can take small position. So let me look at if I can see a market, I can find an entry, just to use an example. All right, so here is gold, right? So here is gold. So I can use 0.02. So, but I'm supposed to get to a very better level to do that, or 0.03, depending. Okay, I sell. So I'm waiting for other point, right? Okay, so I've sold one position. So I'm waiting if more, because it can gravitate up here. These are discount level. So when it returns to this discount level, I will add more position and all of that. And so facing one instrument, meticulously doing what is expected of you is what gives you much money and less losses. Okay, now we return back here now. This guy is now showing obvious reasons about to return, right? And which was cool enough. But the point is that I would love that this was grabbed, this liquidity was grabbed. Now, if you look at your MACD, is it actually reacting, right? So you want to see, this is engulfing. What next candle going to print? Okay, so but this obviously as like a pullback. Now, if this pullback happen, it can pull back to this point, and if you get there and aggressively break it, that means we are returning. So this is why facing one instrument per time can be very meticulous for you to get your trading set up proper and profitable and winning. Okay, but if you jump from this to this, jump to this to that, jump from this to that, you can see what I say about gold now, right? Can you see? So you are waiting. So anything that makes it to come across here and come and grab this, then obviously it has failed, right? So, but for others who have jumped into the market before now, have taken their profits, obviously from here and all of that. So sometime we now travel to 1 minute, but I'm not going to complicate issues for you. You are a day trader. This is how you look for opportunity. I've told you this is a displacement. You want it to be, you want it to, what's it called? You want it to stop, okay? So, and obviously, if you look at this, this is 5 minute fair value gap. And I don't want to stop talking. I don't want to be talking so much about these things anyway. So this is like 5 minute fair value gap. Look at it from here to here. So which is like to be mitigated, right? So which is to be mitigated. And once it's mitigated, and so there are so many confluences that make this happen. This is this level, golden ratio, and then discount level for Fibonacci. And then when it comes to, remember I told you, when you find a position here, you DCA here, you DCA here, but you have to calculate your market. It's all right. So you get it now? Very, very simple. And that's exactly what we talk about the market. So ladies and gentlemen, support and resistance strategy is very sweet, very, very amazing trading strategy. Simple, straightforward strategy. You heard me right? Simple, straightforward strategy. But it requires discipline. If you are not disciplined, you will misbehave. I can guarantee you that. You have to be highly disciplined. You have to be highly disciplined. When you are not disciplined, you jump around. No, no, no. You're going to misbehave. So you have to be disciplined. Right? For any one of those group I send this signal to now, I'm sure all of them should be in massive, massive profit. So that's support and resistance strategy, ladies and gentlemen. Now the subsequent video I will do is scalping. All right? What do I call it? Scalping. You want to learn more detail and other things you should be checking, confluences you should be checking, to trade and boost your profitability, then you have to subscribe for our platform, right? Now, some people through now will be here, huh? So this is why I will tell people to learn basics. Now you can see this signal was sent. A lot will be waiting for all the profit level to be grabbed. Yet, market reverse. So let's look at this. Look at Euro USD. So if you now understand, what I first said, your basics, now you go to your 1 hour, right? Now this look confusing, but definitely it's a downtrend, right? Very simple. So now let's just use this guy to mark our obvious point, right? Let's mark this, our obvious point, right? So now this pre-market analysis, okay, our obvious point. Yeah, so this has actually not happened. So you actually have launched and make money. Yeah, so now, so let's take this. Okay, so I checked every liquidity area that I know the market can gravitate to. So I think this should be, this is a pivot point. So sometime you could mark it because it won't allow, if you don't mark them right, you won't know what market is actually reacting to at those points. And remember, you are a day trader. Okay, so now let's go, ladies and gentlemen. You can see gold, I told you. So let's go back to 5 minutes, 5 minutes, 5 minutes, 5 minutes. So as a day trader, price action is very important for you to understand. I've told you price action, demand, supply zone, support and resistance, yeah, imbalance, and displacement. Okay, what's going on? What's going on? What's going on here? Right. Bitcoin to have done a nice journey. Okay, so let's go. Come on, 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 come on. Okay, okay. Bad network, guys. Ooh, bad network. Okay, so we've returned to 5 minutes. Here we are in 5 minutes. Price action, support and resistance strategy. It's a very, very massive strategy. Simple to